Hello accounts people, we're going to have a look at the world of Salma. So Salma is a small business, we're going to use it to practice postings from day books and cash books. So she has been trading, there's already a trial balance, she's already VAT registered, so she's using the cash book as prime entry and double entry, or she will be now. She's starting to do some credit sales and credit purchases, so we're going to go through the order, we're going to post some transactions to the cash book. We're not going to complete the ledger accounts because we're going to finish off the day books to the ledgers, and then we're going to post the cash book to the ledgers once some receipts and payments have been made from our credit customers and suppliers. Then we'll balance them off and draw up the accounts. We have also got a purchase ledger and a sales ledger, but I've completed that to save time. So here's a partly completed trial balance. As with all sole traders, the capital is the difference between assets and liabilities. Assets minus liabilities equals capital. In this case, she's got £6,000. Sole traders, every time you make a transaction, the capital should be altered. It goes up or it goes down. Any bit of trading. So now we know that it was 6,000. That wasn't exactly the hardest sum on earth. We can finish off capital account. So now we've got some transactions. We're just going to put them into the cash book first. In fact, we're going to put them into the ledger accounts afterwards. So £400 cash into the bank. Now here's our cash book. You can see from the trial balance she'd got £1,600 cash. She was overdrawn by 4,500 in the bank, so it's no surprise that she needed to put some money into the bank, if only to please the bank manager. I'm not sure why that was on caps lock again. That's better. So we're taking out of cash because this is the credit side. It doesn't make that much difference to 4,500. It's still over 4,000, but at least it shows some willing to the bank manager. £36 with a debit card for fuel. Not sure I'm really bothered about the dates because £36 will be £6 VAT and other expenses. Purchases by debit card £1,500 plus VAT. A lot of money going out. Not sure I got the date right. Got the date 13th. No, it was the 17th, wasn't it? So we're still using debit card. £1,500 plus VAT is £1,800. And that of course will be analysed in our cash purchases. So then on the 20th we've got some money coming in, 2,400 including VAT. That's 2,000 plus VAT. 2,000, not 200. And an instalment of £300 on the loan. That's money coming out. Forgot to pick up the date. What did we say? The 24th. Always going to come out the bank. No particular other column for it to go. So just have to stick it in sundries. Postings will be slightly different because it won't be the total of the sundries. Laptop, £480 including VAT on the 28th. Remember the date this time. And that'll just have to go into sundries. We haven't got a column for it. £600 for personal use drawings. So, not doing very well money wise at the moment. Actually read the instruction. Personal use. No, oh, it didn't actually say. I'm making an assumption then. It's going out the bank. No VAT, of course. This is our own money on drawings. The owner taking out their own capital. So we've done those ones then. So that's the easy stuff. So routine, but we've only done the cash book side because we're posting from the cash book later, and there will be other items going into the cash book. For instance, sales. We can post receipts from credit customers and all sorts of other bits and pieces later. So once we've done that, then that's task 2. Task 3 tells us we have some day books, all dated, so we're treating it as the end of the month, the 30th of April. Day books are here. They've all been totalled up just to make life easy. I'm just going to have a look at my paper version. That means I haven't got to keep flipping back. Right, so sales day book then, routine postings. So these will go straight into the ledgers. So whichever way around you do it, it doesn't actually make any difference. Just get into some kind of habit. Most students will probably do the £6,400 into sales first. Sales account was actually just under capital, so here we go, 30 sales day book, 6,400. The VAT on it was 1,280. Doesn't have to be, of course, 20%. It could be selling a mixture of items. Some appropriate description, and then the 7680 we'll go into the sales ledger control account. Now that actually is in our newer ones, the ones that are new for her transactions, credit transactions. Seven, 6, 80. So first day book done. Doesn't matter what order we do them in, but sales returns day book 100 plus VAT. So in our main ledger we would have had the VAT, and we haven't got all the returns are in here because we hadn't got any returns before. So sales returns are debits. Sales return day book. VAT in our VAT account. And in our control account, the whole 120. Showing that customers sent something back, they don't owe us so much money. Next day book then, so purchase day book. Purchases are debits, 920. Fairly routine, doesn't make any difference whether it's credit or the cash purchase that we did earlier. Purchase day book, 920. VAT 160 on the same side. and then the total of 1080 into our new control account. We owe money to suppliers. Now whilst we were doing this, we would have been putting these items into our sales ledger, sorry. So we can see here, but of course these are the individual items going in from our sales day book. So the 720, the 3000, the 360 and 3600 add up to the 6400. There was only the one return, and our purchase ledger. So these are the same way around as our control account. So our 1080 is our 720, 240 and 120 added together, and then we haven't done the return yet. So purchase return table 180 12 VAT. So the purchase returns is actually here. So purchase returns, purchase of debits. So the returns are credits. Obviously what we bought didn't have the full rate of VAT because it wouldn't be £12 on VAT if it was 20%. But the VAT will be the same side. And then the 192 in the control account, well, we get the pattern here, we owed them that much, we spent, we give them back, before I forget the amount, 2 on the same date. Because they're end of month totals rather than individual items. In the purchase ledger, notice they've got the individual dates of the individual transactions. So there's our purchase, there's one of the returns, and these are payments and discounts happening later because it's already completed. So now we've done those, we can do some money from the credit customers and payments and credit suppliers. Of course the discounts don't happen until the date of the money coming in, so this will come into our cash book. And we've got the discounts allowed day book, so the 5% for Charlie is actually the £36 plus V, or including VAT. But this is money coming in, so into our cash book. Doesn't matter if the dates aren't in perfect order. Oh, I forgot that. And he paid us 684, and he's a receivable. And we're not going to post into the control account yet. Find where we were. Daybooks, that's where we were. Because you're going to post the totals. Now, if there were more payments received from credit customers, there is actually only this one at 684. We'd add them to the 684 before posting to the control account. Payments, though, we've got 2 to credit suppliers, so you'll see the multiple effect on here, paying more than one entry, but one entry in the control account. On the 9th of the 4th, we paid Simon. Some kind of indication that it's purchase ledger. It will be going out to there, and I've forgotten how much, 648. And we've got to remember that it's a payable. So on the 30th we paid Sheller £40 on account. If you were doing this for a real business, you'd probably have a column that would have the code of the supplier or customer in. Could of course be in cash, but I'm making the assumption that these are all bank transactions, and I wrote the exercise, so my decision. So we paid £40 on account, and then we post the other discounts, the other day books, the discounts columns. So discounts allowed are debits. So they're all in the newer one. So discounts allowed. Here we are, 30. So day book will do. Still now gone off caps lock. Net of VAT. £6 in VAT. Our VAT account was here, so on the debit side as well. And in our control account, that shows, although we haven't posted the actual amount of money coming in yet, because we haven't posted from cash book, the £36 that our customers don't owe us anymore. And the opposite side, of course, £60 plus VAT on our discounts received. We have, of course, already done these in our ledger account, so there's the discount received, the whole amount. Same side as the control account. So £60 plus VAT on discount received. Discounts received. Discounts received. Day book. £60. VAT. £12. So we've done the 60, we've done the 12, now we need to do the 72. And the 72 is money we don't owe our suppliers because we paid them quick. The whole amount. So that's what we owed, sent some goods back, got a discount, and the payment will be here once we've finished off our cash book. So that's actually all our transactions posted from our day books, or the first initial postings made into the cash books, the book of prime entry. So now we've just got to finish off our cash book and make sure everything balances off. So here's a story. This is the money that came in. We're still going to be well and truly overdrawn. There's no others on sales. You'd expect to have less items on the sales side, on the receipts side. So we need to balance off £1,600. Well, actually, we've now got £1,200 left in our cash because we started off with 1,600. We paid out 400. That's nice and easy. And we paid out, including the initial 4,500, 8,404 credit the bank. So if I do 8,404 minus 3,484, we've got 4,920 into our bank. Check we've got that one right. Right, so these can now be posted. So in the exam, when you come to do the posting, so this is like the filling in question in bookkeeping transactions. When we actually come to post it, they won't show you all that. That's all you'll see. Doesn't stop us posting it though, because cash sales are credits, VAT. So let's post those first. So our sales was quite early on. So remember, we didn't do the sales. Cash book receipts, and make sure we get the right amount. 2,000 plus VAT. So it'll be the net, of course. VAT. Cash book receipt. Need to identify a little bit better than just cash book receipt. 400, and we've done the 2,400 in our cash book. And we've also got to record the fact that one of our credit customers paid us £684, debit the cash book, credit the sales ledger control account. So, wrong way. There's only the one item in there, so cash book receipts. The amount including VAT, reducing the amount owed. 684 plus 36 VAT was the 720 from Charlie. So that one's nice and easy to do because there's no awkward items. However, we can't hide the rows on here for the simple reason that we've got a bank loan, we've got a laptop, we've got drawings, so we can't actually, if we hide the columns, we know we can't just post the sundries total. The others, however, we can post the totals. So we'll do our cash purchase first, that's £1,500, and then we can, these are all going to be debit entries, credit the bank or credit cash, debit VAT, debit purchases, debit purchase ledger control account, debit other expenses, and then these will have to be posted individually. So, doesn't matter which one we do first, we will debit VAT with 386. Because it's mixed items, cash book payments we'll have to do. 386. Debit purchases 1,500. Payments. So still debit purchases, whether it's paid cash or whether it's on credit. Next columns are payables. So we may, of course, in the real world be paying hundreds of suppliers during the course of a month. So we just post a total, the 688 into our control account. Cash book payments. I forgot the amount. 688. And then other expenses of 30, fairly routine. So here we go, we've just got another expenses. Nothing wrong with other expenses. If it does the job in terms of keeping the account, that was just the motor fuel, because of course there's stationery, all sorts of items in it. If it works for the company and helps to analyse expenses, doesn't need to be broken down anymore. You can put everything in other expenses. And in the sundries, we've just got to take these individually, so they'll all be debits, so credit the bank, debit everything else. So debit the loan. Loan was one of the early accounts. Here we are. So we owe 2,500. Wouldn't matter if you put the proper date on this one. So that'll be down to 2,200. £400 on a laptop. We got office equipment, yep. The VAT has already gone into the VAT account. And then £600 drawings. Drawings was actually didn't exist until the current month. The owner taking out her own capital. And that's all the postings done. So we posted the whole lot. Had our cash book been all complicated, we could have had a lot more payments to suppliers. We'd still have done one entry. We could have had lots more entries for cash purchase. Of course, we've only put one entry in the VAT column for these. And in the exam, again, you'd probably see these hidden, so they wouldn't have awkward items like this. Everything would have to have a column. But that actually is all our postings done. So everything now just needs to be balanced off and put into our new trial balance. So space here for our trial balance. So what has actually happened? Well, our opening inventory isn't actually a ledger account. It's come over from the previous year. It was a debit and a credit entry that we created. It will be added to purchases, and I've also done an end of year adjustment already. I've worked out that there's a depreciation expense of £7,000, of which £4,500 is on our vehicles and £2,500 is on our office equipment. So those I put in. The £6,000 capital won't change. There's no point in worrying about that one too much. Now we just need to work out the rest of the accounts. Now I'm not going to waste time where there's only items on one side of an account. I'm not going to waste time on video balancing off simple accounts. This one, when it's balanced off, will be £56,400. And our purchases will be 14,420. Other expenses 2,830. Our vehicle hasn't actually changed. It was 35,000. Although it's worth less in our books, it's now worth 30,500. We still record the original price and how much it's depreciated by. Our office equipment is one that's changed, but actually all we've done is add the £400. So I'm not going to waste too much time balancing that one off. Drawings we know was 600. So most of these don't need too much balancing off. So discounts allowed is up here actually, so or down here. It's just 30. And discounts received. Common error, getting these the wrong way around. Even level 3 students do that. Level 4 students do it as well. Our purchase returns is just going to be the one item, so we'll just put in the 180. Except it's on the credit side. Oops. Sales returns was just the one item. Sales returns was 180. Purchase returns, credit 180. Sales returns, debit 100. I'm moving too quick for my eyes. So our receivables or sales ledger control account, that one will need a little bit of balancing off because we've got debit and credit entries in it. Not too difficult though because I've done it on a spreadsheet. So 30. going to remember, I'm not going to put the brought down balance in. And that will be the 1080, the biggest side, minus the small side. Now that's 128. Oh, actually, that's the payables. I will do that one anyway. I said sales ledger and I've actually added this one up. Now whilst we're at it, so payables 128, our purchase ledger, if we have a look balanced off, we owe Simon £72, or do we? Because actually let's do it properly. We don't, because Simon, we bought 720 worth of goods off, we actually paid him taking a discount, and then we sent some goods back afterwards. So actually Simon owes us 72, which is why in our list of balances it's minus 72. I've left that in, so in case of error. However, this side we do owe Sheila some money. We owe her 200. Put the wrong date on Simon, didn't I? Hope you noticed that one. So actually, that's how the two between them add up to the 128. So we just checked that our purchase ledger accounts add up to our control account once we balanced off our control account. Now we'll do the receivables. Big side, little side. Minus the little side. 6840. If I get the date right this time. I didn't bring that one down, so I didn't get the date wrong, I just didn't do it. So 6840 into our trial balance. Well, let's just check it first. Sales ledger. Charlie, these ones are actually already done, or this one was done. 2880. Chris has only got the one item, 360, and Claire's only got one item, so yeah, 6840. We're ready to go. We've checked that our control account adds up to our individual customer accounts. Before we moved on. So the bank will be from the cash book. We already worked that one out actually, we know we were overdrawn. In fact, we've hidden the figure though. Because it was a 4920 that carried down on the debit side, it would of course be brought down on the credit side. So 4920 overdrawn on the credit side. Cash didn't read it, it was £1,200, that was nice and easy. The bank loan, 2,500 minus 300, we owe 2,200. And then one last item, which hopefully will be 5,032. I've got little checks on there. VAT. Let's check it. No, actually. So VAT, no, it won't be that much actually. Hang on. New ledger account. How much is it different? What have I missed out? here. I'll have a look at it in a minute. So VAT then from our VAT account needs balancing off. Typing too quick. $632, and it would of course that's what I got in my trial balance here. We've got 4,400 missing. What have I missed out? Right then, where would a boo 1420, so it not right here. I've done a typo somewhere. Or have we missed one out? Because it doesn't balance. Well, 4,400. Okay, I have missed anything out. I'll put the right numbers in. What have I done? One of the silliest, easiest mistakes. Which is why it was 4,400 out 2,200. So there we are, we've done our correction, we've got our final trial balance. So that's essentially where the level 2 syllabus, once we've done a few corrections, including the correction like that one in bookkeeping controls, happens. So what does it mean to us as a business? Well, we've actually got a few expenses and items here. So actually, I've got a little additional challenge. So this is just purely information only, but where does it go? Sometimes helps you understand what you're doing. In fact, I'm just going to move it along a bit. That'll do. So actually, I've posted in our trial balance into an extra sheet. And what we would do from this as a business is draw up our accounts. So as we go through them, I'm actually just going to highlight them because we use each number either in the profit and loss account, it's either income and expenses, or in a statement of financial position. And then the owner will have a new capital balance at the end. So we put in a few provisions. There are a few other things that aren't in here. We may have paid something in advance. So issuing a better position. Well, let's have a look. So sales. So if I cut that, actually no, I need to copy it. Because I need to paste the number. But remember, I've got rid of it, or on an example, I'd a ticket, wouldn't I? Sales returns, I can remember that one. Minus 100. So our net sales are 56,300. So the opening inventory was there at the start of the year. Purchases 14,420. Purchase returns. So this just deleting is just making sure I don't duplicate figures, or if I miss something out, I can easily spot what I've missed out. Closing inventory, that's how much stock you'd ever had on the shelf. That needs to be counted up manually. It isn't off a ledger account. You may have a ledger account there. However, you check the ledger account to see how much hasn't been recorded as going out, or anything that's lost, damaged or stolen. So actually she made £49,460 gross profit. This is an oddball. Discount received of 60 is a sundry income. What we actually do is just add it to our gross profit, along with bank interest received and a couple of other items. So our updated gross profit doesn't really have a proper name, that one. And then we take off our expenses. The depreciation we calculated manually. Discounts allowed was 30. And other expenses, there's no other expenses, was just the 2830. You can see I've already created the sheet for everything to add up right. So her profit for the year, this is the amount she'd pay tax on, or there'd be an adjustment for depreciation, it has to be calculated a different way, 39,660 so far. It's only April. So what do we do with this? Well, we lay it out into our balance sheet or statement of financial position. So our accumulated depreciation has now been updated. We've actually just put these in. So this is a new business, so 4.5 and 2.5. This is where we record in our actual accounts the cost minus the accumulated depreciation. So our assets are actually worth 36,400 book value. Cash, let's put the amounts in. So cash off here, 6,200, and actually don't forget we put these in as well. Oh, we put that one in actually, so 6,000. So our cash was 1,200. So these columns are just summary columns, and then the totals go across. Bank won't be on this one for the simple reason she's overdrawn. Had she got money in the bank, it would be. So 6,840 receivables, and the closing inventory. So total assets of 52,940. Liabilities will bank. She actually owes, if you remember, 4,920. She owes suppliers 128. I remember that one without going back. And she owes HMRC £632, and of course they owed her money at the start. So our net assets, which is this figure plus, well, the total assets minus the current liabilities, 47,260. Different accountants do these slightly different ways. You may see a net current assets minus current liabilities figure. That's useful information. If it's useful, do it. So the bank loan now is 2,200, and therefore we can work out the rest of the figures. Now we're looking to balance. There's different ways of balancing it up. Net assets figure with this figure down here. So if everything works out right, we haven't missed anything off. Well, we did put that one in, so that was already in there. Drawings, we've done the bank loan now. Got the opening capital in there, done the VAT. So the main one to go in there is drawings. This is the owner taking out some money. So if you put in her 39,660 profit, so that's where she started, that's her profit. She's only taken £600 out. Her capital is therefore now, I'm just going to double check against my original calculations. I think 45,060. The balancing figure should equal the net assets. Yep, so the 47,260 adds up to our net assets. So we've actually drawn up our final accounts on our bookkeeping. So level 2 is the bookkeeping, level 3 you'll learn how to do these, but it's nice to see what actually happens. But just be very careful, there's lots of calculations, there's a few things I haven't missed out. We do a lot more adjustments at level 3, lots of work on limited companies at level 4, and this layout can vary a little bit. That's okay, there's nothing wrong with it. The idea is to make it understandable for your sole trader. We're trying to help Salma understand what's happened to our business, so the profit for the year figure's nice and clear, and the fact that her business is now worth a lot more money than it was at the start of the year, because she only took out £600 of her own capital, having obviously worked very hard. Or so far she hasn't taken much out. Maybe when she sees these accounts she'll go and treat herself.